Let's welcome in Anil Manghnani of Modern Shares and Stock Broking. Anil, good afternoon. Do you think markets are just waiting for that event, 2 or 3 events lined up till about next Tuesday, Wednesday? Do you think markets is just waiting for that right now?
I mean, it looks like, although from a technical point of view, I'd like to believe that these events are already priced in, or, market really should not react so much to an event. Because, to be honest, if you look at it both ways, suppose a favorable result does come, I'm assuming a move from 7,900 to 9,000 on the back of all the pessimism of demonetization could not just be a fund flow based on demonetization that is coming to the banks. It is also based on expectations of a UP whatever result, whatever people want. So I am assuming that that's factored into the movement. So it could be a case where if the election result is not favorable, then you get a knee-jerk sharp reaction. And if it were favorable also, you get a small pullback in terms of profit booking, or as in buy on expectation, sell on news. Whereas it's not a sharp knee-jerk, it's just a gradual correction. So it could be either way, that the market just wants to take some profits, but it's waiting for the event. I don't know. I'm just assuming, since you've had such a big move. I still feel, although the charts are very, very strong, 9,000 to 9,200 is going to remain tricky whenever it comes, whether it comes now, whether it comes later. That area has always been tricky. It was tricky in 2015 when we hit 9,100. It was tricky in when was last year when we hit in October at 89.68. And this year we've come there and we are meandering there for the last 2 weeks. So it just goes to show that this area between 9,000 and 9,200 is a technical resistance that will have to be dealt with at some point. Yes, maybe eventually it does cross, but when is tough to say. Regarding the Fed, I think everybody is expecting now a rate hike. Interestingly, the rupee is not reacting as badly as some of the other currencies. So the GBP has come off quite sharply from 127 to 121. The euro hasn't really gone anywhere, but from 108 has come back to 105. The yen had gone to about 111.60. It's back to about 115. The USD CHF, not USD, the other one, USD CAD, Canadian, was 128. It's gone to 135. So the US, all the major currencies have weakened against the dollar. But interestingly, even with everybody knowing about a Fed hike impending next week, still the rupee is not so bad. I mean, from 69 or 68.80, we've actually come down to 66.70. So we've actually rallied about 3% in the last couple of months. So I don't know. I think these events are all known, and you really need an abnormality where something totally weird happens for the market to really react substantially. And I think if you're talking about the hike, then a rally in the dollar and a rally in the U.S. markets, a rally in U.S. yields should actually be negative for India. But strangely enough, everything else the whole world is rallying with the U.S. equity. So, people say when the dollar is strong, money moves into dollar-denominated assets. When the yields are high there, people invest more in U.S. Stocks and treasuries. But I think globally, the people are enjoying the ride. So I think it's a little unfair to say that too much should be placed on the UP election or the Fed meet next week.
Right. In terms of yields or dollar index, what is your call looking at the charts? Where do you think that's headed?
See, the 10-year has a major resistance around 2.65, 2.66 or so. It's bounced back from there once. Ideally, I would like it to come first to 220s and then again move up. But if it weren't to do that and it was to take out 2.65, then 3 is the next target on the 10-year yield. Dollar index has an unfinished target at about 107 to 110. Now, there are two ways it could do it. It could maybe after the news, the dollar comes off because, again, buy on expectation, sell on news. And maybe second half of the year it rallies, or then we have just a strange event and the euro completely collapses and the dollar goes straight to 107, 110 and then tops out. So I'm not sure which way it will happen, but it does have an unfinished target still on the upside.
Right. Let's talk about some names as well. First, let's start with Reliance. So we've n number of times spoken about the higher end of the range. Finally, that Reliance has gone through that range. What is the targets now?
Oh yeah, I think now it's completely broken out from every resistance, every point. Okay, maybe it's run its course, or has it had a phenomenal run? It needs to pause, come down a little bit. But my gut feeling is eventually. I'm not putting a time to it, but eventually you think that 1650, which it was the all-time high in 2008, would be the next target. Whether it's a year down the road, I don't know. Since it's already gone up 25% in the last 2 weeks. But I still think that will be the next level, because after having taken out all the recent highs, even the 2009 high at 1267, the last visible top post that is in the 1650s. So I think that's going to be the eventual target for Reliance at least.
Right. Any call on SBI, ICICI? These are names that have not done anything in the past few months.
Well, if you look at the longer-term setup, nothing wrong. I still think SBI has done all the hard work at the lower end. It's made a base properly. It's coming up. It's gradually moving up. So I think eventually in the longer run, 330-ish is the level. But for the short term, again, I think it totally depends on what the market does, because the market is not moving anywhere. So even these have gone sideways. Maybe if it were to correct SBI back into the range of 247 to 230, that would make for a buying opportunity. ICICI Bank also very similar. If you look at the last maybe 4 to 5 months, it hasn't been able to cross that 300 hurdle post demonetization and demonetization. So I think that's going to be the first key level for ICICI to cross that barrier of 300. If it can do that, then obviously, given the fact that it's nothing compared to what the IndusInds, the HDFCs, the Kotaks, the Yes Banks have done, it needs to play catch up on the upside. I'll just stretch that 300 to 312. That's the 0.618 major fib number. So 310 to 312 is a tricky zone for ICICI Bank. Needs to cross that. Suppose it didn't and it were to come down, then I think back into the 260s to 250s is where again you get immediate trading support. From an investment, probably you will have to wait a little longer.
Right. As far as Idea is concerned or Bharti is concerned, any call over there? They went till the levels of 120. I'm talking about Idea. Bharti went till 400, and now they have again gone back to their previous range.
I'm not totally excited about telecom sector. I know maybe a lot of merger and acquisition and thing is expected, and a lot of movement has all come. I still think these need to give proper correction. So I mean, an Idea which has really gone through the roof, and at the time it went through the roof, there was nothing on the chart. I mean, there was one stock that was just continuously making new 52-week lows, even in a market that was going up. So, I mean, if I had to personally buy Idea, I think back at least from 95 to about 86 or 87 range, I'd like to see it back in that range to make it an attractive buy, because I just think that the news flow is driving the price rather than any strength on the chart. Similarly, Bharti, maybe not as bad as Idea, but I think even that seems to be a lot of news flow. So, I mean, the sharp fall from 400 on that for one day when it opened up 12% and then to come off, I think back into the 342 to about 329 or 328 range is where I think if I want to buy is where I'm looking. But telecom is not on my more buy list as some of the other sectors are.